it's such a treat because I usually spend my mornings with this gentleman and his bow tie. Tom Keene is joining us today as well. He's going to not only talk about the Beige Book and all things finance, but also he's got a new show because we just like to keep Tom Keene busy. So he's got Bloomberg Money. It's going to premiere this Friday along with Scarlet Fu. So we're going to talk to him about all of that. But that Beige Book, it looks like it's just hitting now, the May Beige Book. And Stuart, I don't know if you had a chance to see any of the headlines or if you can talk about it. All right, Stuart, what's sort of the big takeaway at the moment from these headlines?
What matters most is what evolves between each Beige Book. So the last Beige Book that we had was in April. Today we have one for June. As of last April, economic activity was expanding in just 8 of the 12 Federal Reserve districts. Most lately, economic activity has been expanding in 10 out of the 12 Federal Reserve districts. So a little bit more growth dynamic taking place as we move further into the second quarter. On the inflation front, it was the case that prices were increasing at a moderate pace in April, now moderate to strong across all the districts. Labor market front. Labor market is softening between Beige Books. In the previous report, labor market activity, the pace of hiring, had increased in all but one of the Federal Reserve districts. Now there's little to no change in all but one district. And in that one district, activity is cooling.
What about signs of consumer financial strain? What are you seeing on that end? Because that's one of the things you were keeping a close eye on.
Well, so look, the consumer is stretched thin. Tax refunds have helped. We have seen nominal spending continuing basically apace, but real economic activity on the consumer spending front is a little bit more fragile right now. That's certainly the case.
Alexis, everyone talks about the K-shaped economy. And when I read one of the notes this morning by Vincent Delaward of StoneX, he actually talked about the splintering within the upper K. So, I mean, just because you're in the top end of the K, so to speak, doesn't mean that, you feel like you're loaded and like money is great.
They're headed over to Dollar General and Family Dollar,
Yes.
right? They're shopping at those places.
That's right.
Does this report tell us anything at all about gas prices? Because we know that so many Americans are now grappling with, such high gas prices.
A little bit, but beyond gas prices, consumers are just focusing on those necessities because they are stretched thin by things like elevated gasoline prices. So not only are there fewer discretionary trips to discretionary retailers, but there are notes that consumers are focusing on necessities, and there are also notes that consumers are depending more on credit cards so that they can afford those necessities.
Fed Bank of New York President John Williams said he sees no obvious path or direction for the path of future interest rates. I'm wondering if this Beige Book gives him any more clarity on that path.
Well, when I look district to district and I think about the preferences of each regional bank president, the Beige Book gives us an opportunity to think about what's going on, specifically in Williams District in New York, where both retailers and businesses are noting that economic activity is still strong, and there's been a marginal improvement in manufacturing activity in New York. So to see a rotation from a relative dove like John Williams to a more balanced position, it's actually totally reflecting what's going on in his district.
I want to bring Tom Keene in here, bow tie and all, for his thoughts on this Beige Book.
It's fascinating. What's so cool about this is how twisted Stuart Paul is. I mean, when you do George Mason economics, it's different than everybody else. The heritage of your academics is it's a free economy. Are we just getting a stimulus ride right now, or is it really innovation, Ned Phelps of Columbia's dynamism?
Definitely we're getting some support from stimulus. Tax refunds are carrying consumers through right now, and that's definitely the case in the face of higher gasoline prices. And look, let's face it, there's a reason why a lot of the voting FOMC presidents, the regional bank presidents, are incrementally hawkish. We're looking at people like Kashkari, Logan, and Hammock, all the markets-oriented folks.
They're all the George Mason types.
Well, they're the folks who see basically no signs of monetary policy restrictiveness in financial markets. And when that's the case, yes, there is stimulus that is supporting economic activity, and that's what's giving us this hot headline that activity is increasing in more of the districts around the country.
Isabel, what's so cool about this is the grind of the show that Alexis and I are in speaking terms, but within the grind of the show that we do every morning, I would say, Alexis, one of the underlying themes here is things are getting better. The employment's percolating, that innovation, that dynamism is out there somewhere. That's the constructive tone.
But I
we
wonder
see every day.
if most people are feeling the dynamism, because I mean, we keep hearing about the large amounts of layoffs, especially within tech. But then we get the ADP report today, private companies adding 122,000 jobs. We'll get more clarity, of course, on Friday with the government jobs report. But there still seems to be that disconnect. Stuart, am I right? Where the average person is just going, really? Are things okay?
It's because a lot of the hiring is concentrated in just a select number of industries. So that's part of it. And when you look in the aggregate, there's relatively limited wage growth. If you look over the first 4 months of this year, so the annualized pace of nominal wage growth for the first 4 months this year is just 3.5%. It's getting swamped by inflation. So even if you have hiring, which has been relatively hot, because it's relatively concentrated and because there isn't broad-based wage growth, you're getting exactly the dynamic that you're alluding to, Alexis, which is that folks are just feeling stretched thin, real economic activity is being pinched by higher prices, and a lack of real wage growth.
I guess so. And to Tom's point, we're so graced by his presence. I'm so honored, actually. I'm feeling a little nervous. But to your point, the economy is doing well.
You're feeling a little nervous?
Yes, in your presence.
This studio, Alexis,
I'm in the presence
you're
of
here
greatness.
because this studio is so damn nice. Plus the interns serve coffee.
What are we doing wrong in the morning?
Exactly.
That's what I want to know.
I'm sleepy in the morning. So economy is doing well, but consumer sentiment is near historic lows. I mean, the equity markets, as we all know, are breaking records.
Michigan's horrific, painful, truly painful.
How do you reconcile those two stories, Tom, in your years of experience, not to age anymore?
First of all, there's no analog back to this. I'm in the camp. You can't go 1999, 1870, whatever the analog is. What I would suggest is it's an original moment of technology. And I'm using that word like Technology Review at MIT 50 years ago. It's not about Brynjolfsson and all that and all the fancy modern Stanford stuff. It's about brute technology like the railroads. We didn't know across 3 spouts of the railroads where this was heading. I don't think we know where we are right now.
On that note, talk to us about how important and how timely your new show will be, which
we
is
got
the
so
Money
lucky
Show.
on this. I mean, they came to me I think 2-3 years ago, and they did a survey, and they said they really want to see Scarlet Fu, and they said, we don't know what to do with you, so come along with Scarlet. So we came up with a show, and it had 14 different names, including the Alexis Christophorus Hour, and finally it started gelling 6 months ago, and we just got lucky with the news flow. This is about taking my world and Mr. Bloomberg's world and funneling it with a vengeance into personal finance, retirement, and wealth management. Nobody's really doing
things.
All those things, but doing it from a more academic and more industry standpoint with that same intensity. And to have Liz Ann Saunders on from Schwab, kicking it off as she did for years with Louis Rukeyser. And I went out to Gabriela Santos and I just begged at JP Morgan. She's got prodigious chops. And then we're just humbled by the people that are coming on right,
So
in
it's
the
going to be
coming
12
weeks.
p.m. Eastern time. Is it 1 hour, 2 hour? How much later are we going to ask you to stay here, Tom?
No, that's okay. They've set me up. It's really good. The Four Seasons is 2 blocks away.
Oh, my
In
God.
the penthouse, they've got me. It's like, when Lester Holt was at NBC, they took care of him. It's the same thing here. And
Oh, I'm glad
I
to
can
hear
get
it.
the surveillance pre-nap in before 12 noon on Friday.
But it's a weekly show, just to write weekly. We're not keeping
Every
it here
Friday.
later every day. Every
We
Friday,
talked a lot
12
about
p.m.
it, and the answer was with Scarlett's success of all of her 12 noon platforms,
Right.
let's not screw that up. Like crypto, I mean, I don't do crypto after 12 noon, so don't ask me.
She's so versatile.
Do they have crypto at George Mason? I don't think
They have a lot of
They
crypto
might
at George
have.
Mason. Crypto has picked up the mantle of free banking. George Mason.
Yeah,
is now the
exactly.
home
It's like
of
James
crypto.
Buchanan 101. The bottom line here is we didn't want to screw up the success of what Scarlett was doing with those kind of shows. So we slipped it in. I said Friday. That's the day I take off starting Labor Day. So
You take the helicopter,
You're going to
don't
miss
you?
me Monday. The helicopter really helps out.
Yeah.
The Sikorsky, I can't say enough how that's the game changer for us.
Well, Mr. Keene always elevates whatever show he's on here at Bloomberg. So really happy to hear about the show. Bloomberg Money, we are looking forward to it. Stuart, before we let you go, more on this Fed Beige Book. I mean, is there a region in the country that we need to worry about regarding this Beige Book?
There's just one that stands out to me. And as I mentioned to Tom, I like to look in the Beige Book for how things are evolving around the country so that I can have a little bit of a feel as to which way each regional Federal Reserve Bank president might be experiencing economic activity on the ground. And one of the voters on the FOMC who we don't hear very much from is Anna Paulson in Philadelphia. She's a voter now. And economic conditions in the Philadelphia region are relatively weak compared to much of what else I'm reading in the Beige Book. And so it shouldn't come as a surprise that just a few weeks ago, she was incrementally more dovish than a lot of the folks that we've heard from more recently. For example, she did not want to change the easing bias that was included in the previous FOMC statement. Now the consensus seems to be moving towards removing that easing bias as Kevin Warsh takes the helm. But based on what we're seeing in local conditions in the Philadelphia Federal Reserve Bank region, I would not be surprised to see her continuing to advocate, for example, for that modest dovish bias.
Can I just say one thing? What you just heard
Please,
there,
10 things.
bronze it. Quickly, bronze it. People here are like me without a real job. People like Mike McKee and Stuart grind it. That was I've never read the Beige Book. I wouldn't know it. To me, it's a phone book of Staten Island. What he just said is what Bloomberg's all about, that minutia about some of these documents.
Well, I want to get your thoughts, though, Stuart, on something outside of the Beige Book. Governor Chris Waller wanting to centralize sort of these back office operations at the regional banks and have it be in one large, Federal Reserve Bank. He's being met with a little bit of backlash here, saying, you know what, we're afraid that the power is going to be centralized in Washington. Waller's saying, hey, look, it's going to be better for taxpayers.
Sure. Look, Federal Reserve operations and scope creep are a constant point of debate. What's interesting about the Federal Reserve's distribution of systems is that it's based on a time when banking was really segregated around the country. Banking was really isolated by region. The Federal Reserve districts and the regional Federal Reserve banks did a very specific job in helping to facilitate transactions that were primarily local. Now that transactions do not need to be local and the share of transactions that are local has been shrinking through time, it does make some sense to follow exactly what Waller is suggesting by consolidating some of these processes in Washington. But there is a lot of inertia, especially to large bureaucratic organizations, and the Federal Reserve is certainly one of them.
Tom, can you share with us 0.01% of your infinite wisdom? If you were to choose one market that's getting the story right, do you think it's a bond market, the equity market,
oil?
An
awfully dangerous question right now. The answer is I don't think any grizzled pro knows. The distortions are so great with this mass. I've been going back to momentum. I kid Lizanne about it, mass and velocity. It's so out of the ordinary that I fall back, and Isabel, you know this from the Pacific Rim, the litmus paper of the foreign exchange market.
Yeah.
And the answer is I got resilient dollar, and 2 hours ago we got a 160 print on yen. That confirms, down from that, folks, all the other tensions in the yield space coming up on 5% 30-year bond. The economic data, both hard and soft, you mentioned the Michigan number earlier, and in the stock market, the oddities of just how well we do. I've lost a mental grip of, for example, SOX or the Korean index. I can't understand it.
You know, I'm so glad you brought up the Japanese yen too, because it's forcing us to look at the currencies, Tom. Bloomberg Dollar Spot Index up about 4% here at 1205.63.
Yeah.
I haven't seen it that high, and I don't know. I think I'm going to say months.
Stuart, do you see a contagion here? I mean, forget about gaming, whether we're going to see intervention again by the Japanese. Forget about that. But the bottom line here is it is a sense of contagion, not now, but at some point.
I think that's part of it. I can't help but think that a lot of what's going on in markets is just strictly driven by flows and a desire to achieve some sort of flight to safety, in high tech and AI focused assets. And so when we're thinking about, say, macro fundamentals in Korea, it's completely disconnected from what we're seeing in South Korean equities. It's really just a global desire to gain additional exposure to a very specific industry. Now, who would think that in a period where global central banks are hiking to combat the potential broadening of inflation, that you would see increased rotation or increased interest in the growthiest industry around? But it does seem like that's exactly exactly what's going on because this is a structural technological shift,
Right.
like you said, on par with railroads.
And quickly, Isabel, I would mention the little tea leaves out there. When you look at the politics of your Philippines right now, the complete upside down world of the Philippines.
So exciting.
To see peso go to 61,
Yeah.
out to, I don't know if it's hit 62 yet, but these are some of the little tea leaves the pros look at away from what's the Dow Jones Industrial Average doing.